Sherry was just pointing out there the size of the financial sector here in China, valued at around $45 trillion. Our own estimates, Bloomberg Intelligence thinks there's a possibility of getting profits from commercial investment banking of around $9 billion. It's a huge opportunity, but a lot of Western firms are now bedding down in China. What are your priorities for 2020, your strategic priorities?
Well, for us has always been extend the lead in investment banking, which through UBS Securities that I helped the firm run, but also establish a very strong local presence in onshore China market in both wealth management and asset management. These are really the three global businesses that we have other than the domestic Swiss banking business. So I think we want to put on fire on all the cylinders to develop all our three key global business here in China to really leverage.
And as you look at the year ahead, what do you think are going to be the key drivers then of revenue for the business? Which sectors are going to be really driving that profit for you?
As I said, it's across all the major business, but in terms of sectors, it's going to be domestic consumption for sure. It's going to be China opening to the world, which means a lot of inflow of foreign capitals. We are still forecasting something around 300 billion RMB a year into Asia, notwithstanding the MSCI weighting for Asia inclusion already increased to 20% and not going to further increase, certainly not for this year. So continued inflow of international capital, both passive and also active funds nowadays. And then there's a lot of flow into the China domestic bond markets. That's even bigger. I think by Bloomberg and other, if you were to increase the Chinese bond into your index, global bond index, we anticipate will be as much as a $250 billion US inflow of foreign capital into the domestic bond market, because that's
in 2020,
size.
250
no,
billion?
Next couple of years. But I think it's starting now, really.
But we've seen record defaults onshore for bonds. Is that putting people off? Is that making investors stop, pause, and think about whether this is still too risky a market? There's too much opacity.
Well, you've got to differentiate. When I talk about international capital into the bond, typically they're the financial bond, the policy bank bond, the sovereign bond, i.e. the Chinese government bond, right? The corporate bond, the credit bond we call, depends. It depends on the rating. We used to say all the SOEs are AAA or AAA plus, or the POEs or private-owned enterprises probably 2A or 2A minus. At that kind of level, 2A minus in China already pretty much into the high yield or junk bond kind of a space. So I think with the Standard & Poor's and Moody's other coming onshore to set up an international standard credit rating, hopefully we'll have more clarity for international investors. But we're not seeing massive flow into the Chinese corporate bond as yet. Although later on, with the QFII and other rules relaxation, the stock exchange listed corporate bond, in our opinion, especially the high-rated ones, the SOEs and top POE bonds, should be quite attractive because there's a yield.
What's the IPO pipeline looking like for you at this stage?
Fairly interesting and strong, growing strong, because last year or 2019 we did our first Starboard IPO, which is for the first time in a reasonable, reasonable past that we start to have what we call stock exchange registration style approval, i.e. following the U.S. SEC filing or New York Stock Exchange approving for those IPOs. So we done our first one, and we're working on the second one, both in the biopharmaceutical space. Now the Starboard literally helping the high tech in certain sectors, including new material, new energy, and pharmaceutical and smart manufacturing space companies to raise funds, and some of them are actually loss-making, like our second client, the Frontier Biotech. But we see this growth in this market because there will be more and more Chinese companies seeking domestic IPO as opposed to go to the overseas for IPOs, because China still at the phase of capital formation, as we all know.
So what are the key challenges then for the business in 2020? Is it talent?
I think talent
holding
is
on to
one.
Those clients? You've got so much competition now from the likes of JP Morgan, from the likes of Goldman Sachs, and the domestic players.
Yes, I mean talent first. Talent is always an issue, right, for you, especially the high-end financial service that we are in, both the investment banking but across to the wealth and also asset management. So we make sure we have the whole life cycle for the key talents. We hire the right people, both from the campus and also lateral hiring. We train them, we retain them, not just pay them competitively, but more importantly, to co-opt them into the UBS culture. So we hire the right type of employees and colleagues who will become the backbone of our workforce and carry our franchise towards the future, right? The other thing, competition in the market is you do see the emergence of a strong, at least a half handful of the Chinese security firms who are much bigger by size, who are focused on many multiple business frontiers, including retail, brokerage, and others, which international firms such as us choose not to operate or compete, because that's not our global strength. So I think we focus on more institutional business, and we focus on high end of the wealth management business, both in the UBS Securities. So I think we have to pick our battle and then position the firm well for more competition. But I think with the more financial opening, we do see we can play into our strength.